Hey guys, it's Dave here. Welcome back for another video. Thanks to everyone who tuned into the live stream with me the other day as we watched Rocket Lab's Q4 results together. Sorry if I was chatting with you guys a little too much and talking over the videos. It's a fine balance to strike, but I love chatting and hanging out with you guys. So definitely had a lot of fun. I am putting together a highlight video today where we just go over some of the most important parts of the Q4 results, as well as some of the guidance for the next quarter and wrapping up the full year. If you're new here and you like investing in space stocks, please hit subscribe and like down below. It'll really help out the channel. And with that out of the way, let's dive into Rocket Lab's Q4 results highlights. So starting off with, this may not be the biggest news, but I always find it's extremely cool when we're seeing Rocket Lab deliver components for NASA that are going to the moon, and this is going to their big NASA Gateway space station that will orbit around the moon. These components are solar cells, and it's just nice to see that those have been delivered. So good job to Rocket Lab on that one. Next up, we have some really big news here. I found this to be pretty exciting. This was actually some really big unexpected news. So it looks like following their most recent ocean recovery, the rockets have been coming back in such good condition that they're now looking into whether they should just get rid of the helicopter entirely and just continue letting their rockets go for a little swim in the ocean, picking them up, and then recertifying. Could be a new way of targeting reusability without having to try and do this complicated mid-air catch with the pilot standing by every single recovery. I found this extremely interesting. Let's actually listen to Peter's announcement on the subject for a little bit more detail.
In November, during our final mission for 2022, we conducted another successful splashdown and ocean recovery of Electron's first stage as part of our rocket reusability program. We had initially planned to attempt a helicopter catch for this mission, but not all the requirements were met to ensure a successful capture due to a brief telemetry loss with Electron's first stage during atmospheric re-entry. This turned out to be quite a happy turn of events, as it gave us another chance to bring back a stage that had been for a swim. Never one to waste an opportunity. Our team put the return stage and components through analysis and testing, and we're starting to see a bit of a pattern here that we hadn't initially expected. Electron survives an ocean recovery in remarkably good condition, and in a lot of cases, its components actually pass requalification for flight. In one of our up-and-coming flights, we're going to attempt another ocean recovery, this time with a few additional waterproofing modifications to the stage to protect some of the key areas and the bits we want to keep dry. Pending this outcome of testing and analysis of the stage, the mission may move us towards sticking with marine recovery altogether and introduce significant savings to the whole operation. In 2022, we proved that it was possible to rendezvous with a returning stage mid-air and get it on the helicopter hook, but if we can save ourselves the extra step by just plucking out of the water, we will. Without the helicopter, if we're able to determine that ocean recovery is the most viable and effective path for recovery, this opens up even more flexibility with our launch windows and takes us from around 50% of Electron missions being suitable for recovery to anywhere between 60 and 70. We look forward to sharing the developments of this following our next recovery mission in the coming months.
When Peter started talking and he was saying there was an unexpected development here when they were looking at the recovered Electron rockets, I was starting to get a little nervous there. I was like, oh no, did they find something that was really bad and that the recoverability of the vehicle is in question? But it's actually better than that. The rocket's in such good shape that they're just adding some protection to certain components, and they're going to have future rockets try to be reused after landing in the ocean. Now, I do think they haven't decided to fully abandon helicopter recoveries just yet, so we might get a chance to see a fully successful catch and landing of a rocket in the future. But with further testing in the future, they may eventually make that decision and go 100% ocean recovery as opposed to air catch, which might be a little bit easier, although it would require a little bit more protections. And it's great to hear that even if they have trouble with catches, that's really not the end of the world, and they may still be able to reuse these vehicles in the future. Also, it sounds like we're looking at a 70% reuse profile for the rocket as opposed to just 50% going with ocean recovery, because you don't really have to worry about catches. Probably means you could do it at night or further off and recover it and stuff like that. So different locations, more vehicles could be recovered, which is obviously good news for the bottom line. So yeah, this is just a really big announcement that I wasn't expecting at all, and very happy to hear it. I really thought that going into the ocean was kind of a death knell for a rocket. I've always heard that landing in the salt water is really bad for components, but apparently that risk was overstated. Continuing on now, we have an announcement that we're expecting 2 launches just days apart from 2 different continents. So obviously this is a second launch from their new Wallops facility in Virginia, as well as another launch from New Zealand. So we have 2 separate customers, and it'll be exciting to see those launches happening so close together, back to back. Just goes to show the benefits of having the new launch complex up and running in the United States. And we also signed a big new multi-launch deal. I love to see these as opposed to just the one-offs. You like to see multi-launch deals where it adds a little bit more to the backlog. So this deal is for 4 Electron missions for Capella Space, the world's leading provider of commercial synthetic aperture imagery. And it is going to be a multi-succession mission. So hopefully once they start going, we're not going to have to wait a long period of time to get all 4 of these launches off the ground. Now, this is a returning customer, so it's nice to see that customers are obviously very happy with Rocket Lab's services and are coming back for more launches. And then Rocket Lab established Rocket Lab Australia, a new wholly owned subsidiary of Rocket Lab, to explore opportunities to support the expansion of Australia's national space capabilities. The Australian government has committed more than 17 billion in Australian dollars to triple the size of the Australian space sector by 2030. Obviously, Rocket Lab is very close to Australia. They have tight ties to the country. Australian government is an investor in the company, so I really think there's a good potential for more business to come Rocket Lab's way out of this massive investment from Australia. Not entirely sure why they need to create a subsidiary to do it, as opposed to just, signing these deals with the main Rocket Lab company. Maybe it's a bit of a PR win for Australia, where they can say they're working with an Australian company because, it's an Australian subsidiary. And then Neutron can now compete for national security space launch contracts. This is good news, not unexpected. We always knew that Neutron was targeting government and national security contracts, but I think the further out before they're ready for launch that it's eligible to compete for these contracts, hopefully we can get more of them lined up so that when the rocket is ready to go, we'll have more contracts ready to launch, and hopefully can support a wider customer base and a faster cadence. Then just looking at some of the financials, we saw a full year revenue of $211 million in 2022. That's a 239% increase year on year for revenue. So that's a great number in terms of the top line revenue growth. You love to see it. In Q4 now, the number was $51.8 million, which is actually better than expected. They had adjusted their guidance down following that launch that got pushed from Q4 into January Q1. So we were short one launch, and then they dropped their guidance down to more like 46 million. However, they still managed to hit that almost 52 million mark. So they still beat that number despite missing that launch. And this was driven mainly by the space systems side of the business, which I love, is consistently delivering for us regardless of whether launches get pushed out or what happens on the launch side. Very big fan of the space systems business. Now, you can see in these charts, revenue growth is looking good for a full year, and space systems especially has really exploded over the past year. Looking at gross margins, the picture is a little bit less rosy. We have an 18% quarter-on-quarter decline in terms of revenue, and obviously the gross margins are still negative here as we're still growing. Launch obviously played a big factor in this. We had less launches than we expected. We also subsidized one of the launches, so we basically launched with a not full rocket to try and test reusability, and did not make as much on that launch as we usually would have. So that's obviously not great on the short term for margins, but they really just want to push forward the reusability program as fast as possible. Now, beyond Q1, gross margin is expected to expand throughout the year as launch cadence grows and higher margin products become a greater mix of the business. So hopefully we can see those margins and continue to improve in the future. And then in terms of cash burn, it seems pretty good. So we now have $484.3 million of cash in the bank. I calculated it out. We had a Q4 free cash flow of negative $33.9 million. So if you divide that that gives you about 14 quarters of runway, or 3.5 years of cash cushion at this burn rate in order to become profitable. So hopefully that's plenty of room for Rocket Lab to turn a profit and start building up that cash balance again. But that is one thing I will continue to watch, and I hope we don't spend too much of that balance sheet on future acquisitions, because you never know what happens with the rocket development. I really just like having that large balance sheet to give you a little bit extra time to play with. If you have problems, you don't want to have to raise when the company is in crisis mode, raise additional capital, that is. And actually, cash consumed from operations decreased slightly as opposed to increase, which isn't something we expected, although we are looking at increases in the future. And then just looking at future financial outlook, we're expecting revenue to range between 51 to 54 million in the next quarter, so pretty similar to what we had in Q4. Space Systems will be 32 to 35 of that, and we're planning 3 launches for this year, $19 million in revenue. Now, obviously, if you do the math, 19 million comes in a little light for how much you would expect an Electron to go for. You're usually looking at something like 7.5 per launch. Obviously, we're a little less than that because we're coming out to 19 million for 3 launches. Apparently, this is a short-term thing as they push forward with reusability and things of that nature, and they do expect the margins for launch to improve and the average selling price to go back up to that $7.5 to $8 million number. Gross margins, GAAP gross margins are expected to be between -5% to -3%. Non-GAAP gross margins 7 to 9%. And operating expenses, GAAP operating expenses, we're looking at 44 to 46, as well as non-GAAP 33 to 35. Now, Q1 2023 adjusted EBITDA, it's pretty interesting here. They're looking at an adjusted EBITDA loss of $28 to $30 million. This was actually a lot steeper than some analysts were expecting, so we're going to look into this a lot in a future video where I'm really going to dive into more of the financial side of things. This video today is just a high-level overview of the results and the presentation, but I'm going to take all this data, make some charts, and change my models around to see how I think this changes things. We also have shares outstanding now of 476 million, where they were previously 473. Shares have been issued. That could most likely is related to stock-based compensation, so a little bit of dilution to shareholders there. There were a few interesting questions in the Q&A, as well as ones that really dive into the financials, and I'm going to take some of that information for that future video, as I mentioned. But let's listen to a few follow-up questions on the ocean recovery, because I found them pretty interesting.
Ocean recovery versus mid-air recovery. So, I mean, is there a big difference in between how much you might be able to recover for it to be received in mid-air versus ocean? Is there like an amount of the Electron that you might not be able to recover in the event that it splashes down?
Yeah, hey Andre. No, not really at all. The reason why we didn't want to get it wet is there is some remedial work that's required when you get it wet. Purging and slightly more intense kind of recertification activities rather than it being dry. But as kind of we've splashed a whole bunch down now and retrieved them back, that's become really well understood for us. So when you trade the extra kind of work that you need to do to kind of replenish them and recertify a vehicle for launch against the cost of operating the helicopter, it's pretty much neutral. So at that point, what the water landing does enable us to do is recover more vehicles because we don't have the constraints of the operations of the helicopter. So it's kind of financially it's kind of the same, but we get to actually reuse more vehicles. So and as we splash more and more down, we kind of learn more and more. And as I mentioned, in the deck, we're making modifications to the vehicle that make it far more kind of seaworthy, if you will. So it's only going to get better.
So interesting there. They're saving some money by not using the helicopter, but it's kind of a wash because they have to do some extra work to get that rocket ready to fly again. Whereas if it was caught from midair and never went for a swim, a little bit of less work to get it ready. And they're also making some more modifications to make it more seaworthy or, tolerate the ocean better. So in terms of the financials, it's a bit of a wash, but they will recover more rockets this way. So overall, that would be a win. And then there is just another follow-up question here on the margins related to ocean recovery.
Hi, good afternoon. So just my question about Peter's comment around the ocean recovery of the electrons. If we go from recovering 50% of the electrons to potentially recovering 60 to 70% of electrons by doing water recovery, what does that do to your projections for gross margins for the launch business relative to your prior expectations?
Yeah, Austin, that's a good question. I mean, I think it really doesn't change it because this basically just buys down the risk of getting to that margin target, right? So I would say the margin targets, in a business like this, are never slam dunks. There's a lot of hard work that goes into it. Recovery is part of it. There are other elements that we're driving, getting to our target margins, including a launch cadence of launching twice monthly. Also some kind of I'd say more traditional savings from BOM elements and labor efficiencies and so forth. So all of it kind of factors into our longer term target of getting into the low 50% gross margin range on a non-GAAP basis. So again, I wouldn't build in any increase to that based on this. I think just maybe de-risks our ability to get there or what time frame we get there.
Yeah, I agree 100% with that. This, recovery is one element of the program here.
So I found that pretty interesting. You would think off the top of your head that if they're recovering more launches, their margins should be better. They should be having more money go to the bottom line. They're saying not to really assume that. Hopefully this will just help them get there faster, but maybe it'll just give them a bit more cushion to make sure that they can really get there and that we shouldn't actually update our models to assume that they're going to make more money off of these launches now. So that's a little bit disappointing to hear, but overall, I think this is really a net positive having this ocean recovery as an option. So that's it for the highlights. I think the headline news is really that revenue beat expectations, but the margins did miss expectations. And also they're guiding for potentially more losses in the future than some analysts were expecting. And the stock didn't like that. So we had a downward move. I think the big news is really around ocean recoveries and that is going to be viable. I know we all realized that they were going to spend a lot of money on Neutron, and it's a big investment for the company. So it sounds like management is not too surprised by the spending, and it's all been planned for in the future. Hopefully the stock does bounce back from this pretty quick, but if it does drop down into the threes again, I'm definitely thinking about making a few moves. Thanks again to everyone who hung out with me on the conference call, and I hope you all have a great week. I'll see you in the next video. Bye for now.